All right, let's talk about the future, specifically crypto's future. What's the world of digital assets going to look like in 2026? Are we talking a massive, raging bull market, or is it going to be a full-on crypto winter? Let's dive into the data and see what it tells us. So, let's get right to it. What's crypto going to be in 2026? If you ask 10 different experts, you'll probably get 10 different answers. On one side, you've got people calling for a new golden age, an absolutely insane bull run. But then you've got others looking at the exact same charts and, well, they're seeing a huge storm brewing. So to really understand what's going on, we're going to break it all down. We're going to look at the two big competing stories out there right now. You've got the bull case, which is all about explosive growth. And then you have the bear case, which is basically a big warning sign about a major market downturn. Okay, first up, let's hear from the bulls. Their argument is actually pretty simple, but it's incredibly powerful. And it all boils down to one thing. The big money is finally here. And I mean really here. We're not talking about that kind of hype we saw a few years ago. This is a full-on stampede of institutional money pouring into crypto. And this really says it all. 2 times. Since the Bitcoin ETFs launched, they've bought up twice as much new Bitcoin as has even been mined in that same period. I mean, just let that sink in for a second. The demand from just one type of product is literally double the entire new supply coming onto the market. That's a huge deal. Hey, this isn't just a Bitcoin story. Take a look at Ethereum. Look at Solana. It's the exact same thing happening. The demand from these new Wall Street products is just completely overwhelming the new supply of coins. It's a textbook supply and demand squeeze, and honestly, this is the rock-solid foundation of the entire bull case. Now, all this institutional cash is having another effect, and it's one that might actually surprise you. It's calming things down. Yeah, for years, the biggest knock on Bitcoin was its insane volatility, right? The crazy price swings. Well, get this. For the entire year of 2025, Bitcoin was actually less volatile than Nvidia, one of the darlings of the stock market. That one fact just completely shatters a huge myth about crypto. And this growth isn't just in the coins themselves. Oh no. The companies that are actually building the crypto world, the exchanges, the tech providers, they've been on an absolute rocket ship. Over the last 3 years, crypto stocks are up an incredible 585%. To put that in perspective, regular tech stocks, which did great, were up 140%. It's not even close. So the bull case looks pretty solid, right? You've got huge demand, less volatility, a booming industry. It feels almost unstoppable. But with prices hitting all-time highs in 2025, you have to wonder, are there some clouds on the horizon that maybe, just maybe, the bulls are ignoring? And that question brings us perfectly to the other side of the coin, the bear case. See, the bears are saying, hey, stop looking at the shiny price tag. Look underneath. Look at the foundation. And when you do that, they say, you start to see some pretty serious cracks. This quote here from BN Crypto really nails the feeling. They're basically saying that, yeah, the price looks like a giant, impressive skyscraper, but the ground it's built on, it's starting to feel a little shaky. So here's the first big red flag for the bears. It's something called a divergence. And what it means is that even though Bitcoin's price stayed way up there for most of 2025, the amount of new money coming in was actually slowing down. That's a bad sign. It suggests the whole rally was just running on fumes, momentum, not fresh new buyers. And remember that whole institutional stampede, the engine of the bull market? Well, here's the catch. Back in late 2024, money was pouring into the ETFs faster and faster. But fast forward a year to late 2025, and those inflows have totally flattened out. They've even started to drop. It looks like the main engine driving this whole thing might be sputtering. So who's picking up on this? You guessed it, the smart money. These dolphin wallets, we're talking big, sophisticated investors. They're quietly selling, they're reducing their risk. And here's the scary part. This is the exact same thing we saw them do right before the big crashes in 2021 and 2022. And if you look at the charts, there's another major warning sign. There's this key long-term trend line, the 365-day moving average. Think of it as the market's pulse. As long as the price stays above it, things are healthy. Well, for the first time in years, Bitcoin has smashed right through it to the downside. That's a huge technical red flag that the whole trend could be changing. Okay, so we've got this epic battle, right? The powerful bull case versus this really worrying bear case. But what if we're all so focused on the daily price swings that we're missing the bigger picture?
What if we're missing the forest for the trees? Because bubbling just under the surface, there's a much deeper, much more important tech revolution that's changing finance forever.
And that whole revolution really comes down to one word: tokenization. It sounds complicated, but the idea is actually super simple. It's just taking the rights to own something, anything really, and turning it into a digital token on a blockchain. So, why should you care? Well, because it lets us do stuff that was impossible before. Imagine a huge office building. You can't just sell one window, right? But with tokenization, you can. You can take that whole building or a massive private fund and split it into a million tiny digital shares. And all of a sudden, this giant, illiquid thing can be bought and sold as easily as a share of Apple stock. And the potential here is just staggering. This isn't just about stocks and bonds. We're talking about real estate, private equity, fine art, energy projects, even your own data. The whole point is to take everything in the world that has value and make it easier for anyone to own a piece of it. And when we talk about scale, it's almost hard to wrap your head around. A major consulting firm, Roland Berger, put out a conservative estimate that the market for tokenized assets could be over $10 trillion by 2030. $10 trillion. That's not just a bull market. That's a complete revolution in how the world owns and trades, well, everything. Okay, so we've been throwing around all these predictions about price, about institutional money, about these trillion-dollar trends, but it's a good time to hit pause and ask a simple question. How in the world do people even make these incredibly complex predictions?
Well, more and more, the answer is AI, artificial intelligence. See, the forecasts we've been talking about, they aren't just some analyst's gut feeling. They're being generated by incredibly sophisticated machine learning models. You can think of them like super-powered analysts that can crunch millions of data points at once. Market data, news headlines, blockchain activity, and find patterns that no human could ever hope to see.
All right, so we've got the super strong bull case, we've got the really cautious bear case, and then we have this massive tech revolution happening underneath it all. Let's pull all these threads together now and try to figure out, what does this all mean for 2026? Okay, so here's the big takeaway for 2026. In the short term, the price is going to be a massive tug of war. On one side, you have the bulls and all that institutional money. On the other, you have the bears, pointing to a weakening market. But, and this is the key, no matter who wins that short-term fight, the real story, the long-term story of tokenization, it just keeps moving forward. It's rewriting the entire rulebook for finance. So when you think about it, the actual price of Bitcoin in 2026 might be the least interesting part of this whole thing. The technology underneath it all is changing everything about how we create, own, and trade value across the entire planet. So the real question isn't what's the price going to be? The real question is, are you ready for what's coming next?